Okay, let's go ahead and get this show on the road. Welcome in, everybody. My name is Sam Johnson. I will be your host and trainer today, and excited to present to you this webinar. This is the 102 course of our PayTrace sales webinar series, selling more to level two and level three merchants. Um, if you are new to PayTrace webinars, and I'm looking at the live audience, see a couple new names. So welcome to you guys. A lot of familiar names as well. Welcome back. Um, just to cover a few housekeeping items. These are 30-minute sessions. They go by pretty quickly. You will notice that as you are logged in, you might be like, man, I want to talk to this guy. You are muted. I do that just because, not that I don't want to talk to you all, but we want to reduce background noise, distractions, things like that. Um, so, as a way to encourage engagement and interaction, if you wiggle your mouse around over your Zoom window there, you should see a box pop up, one option for Q&A. Feel free to type in your questions there as we go through the presentation. Comments, emotional outbursts, feedback. I like all of it. And we'll shell out maybe, a couple minutes at the end of today's presentation to tackle some of those. This will be recorded. It's also on our YouTube channel. Definitely check that out, youtube.com/PayTrace. You can also just search PayTrace in the YouTube channel. If you're not subscribed to that already, definitely subscribe on there. We've got over 100 videos with a lot of webinars and useful resources. So, without further ado, let's take a moment and cover today's agenda. Again, this course is very centered around level two and level three, but I think to take even a step back from that, really the foundation of level two and level three processing revolves around interchange. So we're going to do a bit of review. I know most of you have been in the industry for a while, so it's good to have a little bit of a refresher on interchange. So we're going to talk about interchange. What is it? How we can discuss this with merchants. Then we're going to go ahead and segue into finding the value in interchange, right? Why it's there. And then lastly, how can PayTrace interact with interchange and leverage some different tools and things to make selling easier and provide more value for our clients. So again, 30 minutes and we'll get you out of here. So we're going to kick this off with interchange. What is it? Literally, let's define it. Rather than try to come up with my own definition or use AI to pull it up, I went to the card brands themselves. And I actually pulled this definition straight from the Visa website. Big, long definition, a lot of words, a lot of phrases that may not be commonplace for a typical business owner. According to Visa, Visa uses interchange reimbursement fees as transfer fees between financial institutions to balance and grow the payment system for the benefit of all participants. There's a lot more stuff to that. You can see I bolded and emphasized certain words, something about transfer fees between financial institutions, right? With a lot of other jargon after that. To me, when I first, so I've had this resource for a while. When I first started in this industry, I started doing some research. This made absolutely no sense to me. I liked MasterCard's definition a little bit better. They use smaller sentences, smaller words, easier for me to understand. They say that interchange is let me get my pen out. It's a small fee paid by who? Paid by a bank, merchant's bank to a cardholder's bank. So, right, reiterating what the Visa definition was, it's something about fees, maybe transfer fees paid between financial institutions, paid between banks, really as a form to compensate the issuing bank for a portion of costs and risks it incurs. So something about fees, something about banks, it's starting to come together a little bit more. Let's go to a visual aid. I'm a visual learner. This thing helps me out a ton. I've walked this through on merchants every time I train a new employee that PayTrace hires that maybe is not from this industry. This is a great tool. I actually stole this from, maybe not stole, I'm repurposing it from a lawsuit from, gosh, maybe 2 decades ago between Visa and Walmart. But I think it does a really good job illustrating exactly what the flow of a credit card transaction looks like and where the money moves. So for this example, it's a pretty standard $100 transaction. We know if this was a cash transaction and there is a customer and a merchant, right? That customer would pay cash to the merchant. Merchant provides goods and services to the customer. Transactions complete, right? But when we involve plastic in this equation, there's a few more steps that are involved and a few more parties that are brought in. This is what we'll call the four-party system. So on the left-hand side of this graph, we have the cardholder represented by their bank, known as the issuer, the issuing bank. On the right-hand side, we have the merchant represented by their bank, known as the acquirer or the acquiring bank. Right now, I would assume most folks are on here because this is a partner-facing webinar today, are going to be over here on this side of the equation. Right? This is where we kind of live. Now, let's walk through that flow. Cardholder is going to make the payment. Merchant processes their credit card. However, when that happens, money doesn't just magically appear in the bank. It isn't magically pulled from a bank, right? That actually needs to occur. So that's going to initiate the issuer to issue funds to the acquirer, who will acquire said funds, and then the acquirer then will complete the deposit to the merchant who gets that money. Now, if you know anything about banks, is that banks don't do anything for free, right? This is a service that they're providing. There's money moving around. Um, there's underwriting stuff that's occurring. So, right, they expect to get paid. So let's use $100 as a baseline for this transaction. When the issuer transfers that money, right, they're going to keep a portion of it. And then when the acquirer deposits that money, they're going to keep a portion of it. That portion that the issuer keeps, right, in this case was $1.70 or 1.7% of that transaction, which is actually a pretty good rate. Um, that is what we call an interchange. That is essentially it's a fee pulled out on that transaction by the issuer to cover different costs and risks in moving those funds, right? All that to say, right, every single time a merchant accepts a credit card transaction, there's going to be some fees, the largest of which almost always is going to be interchange. Wonderful. Okay. So now that we've gone through kind of that refresher and we're all on the same page, I do want to just pull out a few different thoughts. From that graph, it just sounds like it's just banks making money, big bad banks, big bad acquirers, just in it for money. But there is value to interchange, right? It's not just fees for the sake of fees. Um, Take it with a grain of salt. I pulled this directly from MasterCard, who sets the interchange rates, one of the card brands, right? But these do resonate. They argue that in the absence of interchange, right? If interchange disappeared, ultimately cardholders would end up paying higher fees, right? The actual consumers themselves would have to cover the costs of using that credit. Um, Still mostly not commonplace. Some cardholders do with kind of the resurgence of surcharging, cash discounting, right? Moving the fees around to to the buyers. But ultimately, right, for the most part, as a consumer, when you use a credit card, there's usually not any cost to using that outside of maybe an annual fee from the issuing bank. It's pretty straightforward. Um, Also, things like rewards programs, right? When you think about cashback rewards, I have an airline card that I typically use, so I get the benefit of miles. I don't pay for a lot of flights anymore, which I love. Um, but the airline isn't just giving that to me out of the goodness of their heart, right? All of those rewards programs are subsidized by interchange, right? It's the merchants that we're spending with that are really essentially paying for those programs, right? Makes sense that if interchange goes away, rewards, rebate programs also go away with it, right? So there's a big value there. It's incentive for the consumer to use that type of payment, gives them more buying power. Um, issuer innovation's more stifled. I've been in this industry for about a decade now, and just in the last 10 years, the amount of new ways that we can move payment from person to person using, different forms of credit card technologies is insane, right? I remember when I first started, EMV was kind of the bleeding edge technology in the United States, right? That's not the case anymore. Now there's tap to pay. There's all these different forms of mobile payments now. There's virtual cards. There's all sorts of things out there. Um, right? A lot of the research and development, a lot of these technologies are help, facilitated through the revenue that interchange brings in. So these are all more consumer and issuer facing things. On more the merchant side of the equation, the big thing, right, that interchange provides value for is almost like insurance, right? Without interchange, merchants would be forced to cover the costs and risks of processing transactions. If there's fraud, if there's issues, right? Interchange is there to protect the merchant, right? If the merchant does things correctly, chargeback or fraud occurs, they're protected, right? The bank is supposedly going to eat the cost. Um, right? And there's whole dispute processes, but that's essentially what it's there for, is it's protection for the merchant. And not only that, is it does provide a quicker way to get funded. Um, right? Interchange makes these transactions more secure. For those of you veterans in the industry, right? Next day funding didn't used to be a thing. That used to be like a pipeline dream. It used to be 3-day pay, 5-day pay was more standard back when. So, interchange does facilitate a lot of efficiency. Really, I think is the main thing that we want to pull out of this is it creates efficiency in this process. So, moving on, right? Where does level two and level three fit into all of this stuff? Well, if we hop into our time machine back to when credit cards were kind of a new technology, right? It was very easy for the card brands to get individual consumers like myself, like you all, to put away their checkbooks and to start adopting this new form of payment. A lot of great reasons behind it, right? We talked about rewards programs, rebate programs, better reporting, better visibility. I think most importantly, right, you get what some people maybe think of as free money. It's a line of credit, right? So you get more purchasing power as a consumer, um, where you can buy things now and pay later, right? We're seeing that more and more common today. So a lot of benefits as an individual. However, there is a big gap on more the commercial side of payments, whereas businesses were much more resistant to adopting this credit card technology because they had their processes already defined, their accounts payable, their accounts receivable teams already had systems in place, and this would be a disruption, right? And they didn't necessarily get the same benefits. They didn't want the rewards programs as much. It wasn't, as benefit to them as it is to individuals. So that was an issue, right? Card brands, Visa, MasterCard, Amex, all of them missing out on this huge market opportunity of buyers, right? So they went and did some market research to try to figure out, well, how can we get them to start using it? What are some of the pain points that are out there? And what they found was very interesting. They found that the needs of the business was very different than the needs of the individual consumer. Businesses really had a need to better understand their purchasing patterns, right? How are they spending their money? What type of cyclicalness is there with their spending? Overall, wanting to improve their purchasing performance, right? Getting the most bang for their buck, being more efficient, right, in their spending, reducing waste, things like that. Making sure that they're compliant with all of their vendors, that they're meeting the term policies that have been, offered with that, net 30, net 60, whatever that might have been, and making sure that they're not in arrears or truancy or anything like that. And then, of course, big deal is making sure that their employees are compliant with their payment practices. We can't just give everybody a blank checkbook and expect them to be compliant with company policies. So, with that said, right, a lot of pain points. The card brands got this information and said, well, hey, businesses, we see that you have some issues with your spending. If you start using our credit cards, right, you start using cards as your form of payment, we will actually get you a bunch of data so that you can have more visibility into your purchasing. You can be much more efficient with how you're spending. You can make sure that your vendors are happy and that they're getting paid on time and that you are not having to slap the wrists of your employees. You can put limits on that. Sounds great, right? Fantastic. That begs the question, though, where is this data coming from? Right? If the card brands are providing a lot of data to the merchants, or I'm getting ahead of myself, to the customers, where are they getting this data from? They're getting it from the merchants. This is when Visa and MasterCard developed essentially a carrot and stick program. They went out to merchants and they said, hey, merchants, we need more data from you. We need data from you for your buyers so that they'll use our credit cards, essentially to incentivize you to provide this data to us. We're going to put together this program called Level 2 and Level 3 processing, where the more data that you provide us, the more reduction in interchange that you'll get. Now, this is kind of interesting because a lot of people that I hear talk about level 2 and level 3, they say, oh, yeah, the more data that you provide, the more secure the transaction is. That's why you get a break on interchange. It's not necessarily the case, right? Of course, it's going to be more secure, but it's really the card brands wanting more data to provide their card holders is where this was incepted, right? There's a lot of value in that data. So it's kind of a win-win-win scenario, right? The cardholders get more data, they're happy, they get more buying power. The card brands get more people using their credit cards, they're making more revenue, and the merchants are essentially going to get reduced interchange, saving them money. So that's kind of the foundation of level 2 and level 3. Now it's good to know what makes up that data itself. Um, so to start with, let's talk about level 1 data. Level 1 occurs on every single card transaction. Doesn't matter if it's B2B, B2C, who the merchant is. Every single card transaction contains some pretty simple data elements, right? And it's not very difficult. It's things like account numbers. What's the credit card number? What's the timestamp of the transaction? How much was that transaction for? And then a couple fields of information on the actual merchant themselves, right? What type of business are they and where are they located? That's it. Just five little bullet points there. But you can imagine, right? The amount of transactions that are being processed in the United States alone on a daily, hourly, minutely basis. The card brands are getting a ton of information, right? And they can use that um, to understand trends, to predict things. A lot of very valuable data there. When you climb the information ladder, right, and we get to level 2, it's everything on that previous slide plus a couple other data elements. Really, it's only 5 additional data elements. Level 2 is not too tricky. Keep in mind, level 2 is only pertinent on business to business transactions. If we accept a consumer card as a merchant, just like a typical credit card, I can throw as much level 2 data as I want to at it. It's not going to change the interchange. There's not really any benefit to that. So level 2, it really is just 2 categories. We can simplify that further. Tax amount and some type of customer ID. Right. So as long as a merchant can provide some type of tax field, some type of customer, PO number, customer ID, some type of identification, they can get the benefit of level 2 rates. Pretty simple. I will say most payment solutions today, as far as like gateway and payment technologies go, will support level two in some capacity. I will say I think PayTrace does it the best, but it's very common, right? Where things get a little tricky is when you get up to the top of the information pyramid there, and we get to level three. Now, level three is everything on those previous two slides, plus up to 21 additional data fields. Dramatic pause for effect. All right. We can try to simplify this into two segments again, where you have your summary or enhanced data, depending on who you ask, as well as some line item details. Um, However, right, beyond that, depending on what processing network the merchant is set up with, right, could be TSYS, EPX, Fiserv, Global, right? They all want that data packaged slightly differently. So you need to make sure that the data is being sent out correctly. Visa and MasterCard do not have complete parity on the information that's needed. So depending on what type of card it is, it's going to vary. As far as the technology goes, right, the gateway that we're using needs to be able to support up to 99 unique individual line items for this type of thing. Um, Plus, on top of that is 21 extra fields of data. So, level three is extremely complex. I'm going to throw that out there right now. Um, Very complex. However, with that complexity comes the benefit of reduced interchange. Now, keep in mind, as of the time of this recording, these rates should be accurate. But keep in mind, interchange rates are subject to change. Actually, twice a year, the card brands go out and release their new interchange rates. So always keep up to date on what current rates are. But this is a Visa credit card example, specifically a purchasing card example. And you can see here for a merchant that's not doing level two or level three today, they accept a right commercial card from Visa. The interchange alone is going to be somewhere between probably 2.7 to 3.15%. Right, I'd consider that pretty high, especially if these transactions are pretty large in size. That can eat up a lot of that. However, if that merchant is able to supply some of that additional data that we just talked about, we can reduce that down to, as low as 2.05 all the way down to 1.9%. Right. Now you can see, let's if we start talking in basis points, that's 0.65% or 65 basis points being reduced pretty much at a minimum if we're going from, in this case, product one, right? It used to be called ERF, to level two. It could be as high as 1.25 or 125 basis points being reduced, just depending on how that card is qualifying today. So a lot of value in that. MasterCard, very similar, right? They're what they call data rate three, their level three rate, about 1.8%. We want to avoid any sort of suboptimal or downgraded rates, right? A lot of money being left on the table in those cases. So, what's really great about this, right, when we think about us in the processing side of thing, more on the acquiring side, is that we can provide a lot of value to our merchants that maybe not doing level two and level three today, right? By taking them from, close to or even above 3%, driving those rates down to 2%, right? That not only provides a lot of value to our merchants, but it provides value to us in that we're not having to necessarily having to cannibalize our own rates to make sure that the effective rate for the merchant is substantial, right? We can now protect our own value by providing, a good technology for that merchant. Now, with all that said, it's kind of a dichotomy there in the fact that the benefits, right, are awesome for essentially for cardholders, right? They're getting the data. It can be awesome for merchants in the fact that we can reduce a lot of those interchange costs for them, right? Drive down their rates. However, right, if you think back to a few minutes ago, It really addressed the fact that level three is super complex and it's very difficult. Well, that's where PayTrace came in. Back when we were founded, roughly 20 years ago now, actually almost exactly 20 years ago now, um, we saw an inefficiency in level two and level three processing, and the fact that um, to achieve those rates, it required a lot of manual work, right? 21 additional fields per transaction. We had some merchants that were signed up with us that had a full-time employee that all their job was to do was to manually enter in level two and level three data on their transactions. They had that much volume. Um, that's not efficient. Um, and also, it's, the complexity with level three, the fact that if you make one small mistake on that data entry, depending on who the card brand is, that thing downgrades immediately. Um, so we saw a need, right? And we decided, we can build a better mousetrap. How can we make level two and level three achievable for any merchant that can benefit from it? So we set out to automate it. So rather than actually tell you what we do and how we do it, I'd rather show you. So we've got a few minutes left here. I'm going to hop into my demo account. We're going to run a quick transaction. Where is my demo account? There it is. So I'm going to sign in as if I'm a merchant, and I'm going to process a level three eligible transaction. So I'm just going to keep this simple. We're going to key this in, and I'm going to pull one of my stored cards on my account. I happen to know that this one's already a purchasing card, or one that's level three eligible. But let's just pretend that we don't know that. I'm just going to start this transaction from scratch essentially. So we enter in all of our payment information and we process it. Now keep in mind, I'm not adding in any of that additional level three data that we saw earlier, that summary information, that line item detail, right? I'm doing the basics. Now, that transaction's going to approve, right? It's authorized. However, notice this blue field that shows up. This is PayTrace essentially recognizing that this is a purchasing card and that level three data will help qualify this transaction for the lowest possible rate. So, cool thing number one is that every single time a level two or a level three eligible transaction hits our system, we're going to recognize that, right? So that's the first cool thing. And number two is we make that data entry seamless. When I click on that add level three data button, it's going to take me to another page that has all of these different fields for level three information. Notice that all of them are pre-populated, right? We've essentially created an automated way to uh, basically create templates that from the first time a merchant runs their transaction, they're not having to replicate the process of going in and entering in all of this information over and over again. It's essentially going to automatically fill in for them. Um, Now, suffice to say, they can adjust this if needed, but for the most part, right? Uh, I'll go ahead and refresh it on that transaction. I train our merchants that if the data is good to go, just ignore that button. Um, the only time that they would click this button is if they wanted to adjust or change anything on the back end prior to settlement. But I'd say majority, over 90% of our accounts will go ahead and leave the automated data filled in there. Um, and that's going to go ahead and qualify them for the lowest possible rates. Right. Now I'm just showing you one example of a transaction in the virtual terminal. I think this has the best visual so you can actually see the data being entered. But it doesn't matter if they're using a virtual terminal, if they're using a hosted payment page, payment link, any integration that we have, Trace AR, right? All of the different products that PayTrace supports. As long as PayTrace is the gateway, we're going to add all of the necessary data when it's applicable, ensuring that, right, your customers, your clients are paying the lowest rates that are out there. So that's it in a nutshell. I'm not going to dive super into the nitty gritty of each individual field, but definitely if you'd like additional training on that, I'm happy to set up more of a one-on-one kind of personalized training for you. So, I know we're coming up on time here, team. I know this stuff can be tricky. It can be a little bit tricky to navigate as a partner of ours, right? Especially if you're a newer partner. Um, we want to be a resource for you. So if your merchants have questions that you're not confident in answering, you need an assist on anything to do with level 2 and level 3, let us know. More than happy to help assist you with those discussions. Um, our support is awesome. You can literally pick up the phone, give us a call, and we're going to answer within 20 seconds or less almost every single time. Um, or shoot us an email, right? Whatever's easier for you. We want to be able to assist you on those opportunities. Why do we do this? Because we grow with you. Um, Large majority of our business comes through our partner channel. So we are very strongly incentivized to make you successful because that will make us successful. So whether it's demos, additional trainings, resources, whatever you need, uh, we want to be open to that. So definitely, grow together as partners. You're here because you want to sell more. We will be having more recurring webinars throughout the year. We have a few new products coming up that we're going to launch here pretty much throughout the year. We've got a pretty stacked pipeline. So keep posted on our webinar schedule. You can find that on our blog or subscribe to our YouTube channel. We post all of our webinars, all of our sales videos, product videos are going to be hosted on there. So keep in the loop. That'll only help you be more successful. And lastly, one of the reasons that a lot of people like to partner with us and a lot of merchants use us is um, not only are we great technology, we provide great support, but we're also just, a pretty great partner to work with. We're pretty easy, not very stuffy suit and tie payments company. We do enjoy what we do, and we've got a really fun team of people at PayTrace. So I don't know who these people are in the stock image, but I guess it's a good representation of us as a culture, right? We're pretty laid back. So with that said, I'm going to open this up to Q&A. I did see a couple questions come through. I'll go ahead and talk to that here in a moment. As I'm looking through these, I'm going to put up some contact information to get a hold of us, support email and phone number. I will also say earlier this year, actually last year, we launched our partner portal. Tons of resources on that for you guys to tap into, whether it's sales collateral, videos, how-to guides, best practice stuff. Definitely check that out. It is kind of hidden externally, so you do have to go ahead and type it in, paytrace.net/partner-portal. Um, I'd recommend bookmarking that page. A lot of good stuff on there. All right, let's check this out. Kellis, why is the interchange so much lower in Europe? I actually don't know. One thing that's unique about PayTrace is we don't do European processing. We are US only as of right now. I think we have a Canadian bin that we can use on one of our networks, but um, I can't speak to that honestly. So I don't want to provide any disinformation as far as interchange in other areas of the world. Matt, I see you raised your hand. I see your question. I'm going to close that out. Matt, what if a merchant isn't charging sales tax on their services, assuming they cannot qualify for level 2? Good question. Tax is usually one of the trickiest questions that I get with level 2 and level 3. If the card is a level 2 eligible card, meaning it's not eligible for level 3, it maxes out at level 2. Pretty much every time one of those cards is issued, it is is not tax exempt, essentially. It's unexempt. It's taxable, right? So a positive amount above 0 needs to be put in on those transactions. Now on level 3, specifically in government and different types of businesses, there are a lot of tax exempt cards that are being issued. I usually recommend to avoid downgrades to have some sort of tax value in there. But if the customer, the buyer is really into the level 2 and level 3 reporting that's getting remitted, put a 0 for sales tax. That's what I advise merchants to do when they run those transactions. If it is a true tax exempt card, it should still qualify with no issues. But I've seen uh, other merchants downgrade when they put in a zero because the card isn't what they think it is. So it just varies, really. But yes, most of the time it should be pretty cut and dry. Add tax when it's needed, don't add tax when it's not. Last question I've got on here is from Oscar. Oscar is asking if there is a generic demo account that you can use. There is not. We used to have one years and years ago, but due to, PCI compliance and security recommendations, we had to lock that down. So, if you do want a demo account, sandbox account to use, please reach out to our team at sales@paytrace.com. If you are a partner of ours, we want to make sure that you have access to some type of demo environment. Again, reach out to sales@paytrace.com and they'll be able to hook you up. All right, team, we're at time. I'm going to go ahead and shut this down. Thank you so much for hanging out with me today. Again, stay tuned. Probably in the next few weeks, we'll have some additional webinars for the next month coming up. So check those out. Take care, everyone.